now that we've, since this chart was created, we did see gold actually push all the way down to 400. So it was a great opportunity to short the market based on the price being down and open interest being down. Now let's look at a chart of increasing open interest. This is definitely a bearish opportunity. We have sugar on a downtrend line. We see it reaching a new high, but not an absolute new high. And we see open interest starting to gain momentum at the same point that is reaching a pinnacle. And then soon after, the price tanks down and the open interest continues to push upward. Definitely a long period from August all the way to November, mid-December of 2003. There was an opportunity to profit solely from this one indicator happening, where the price is down and the open interest was up. Very aggressive. And again, it shows you the heavy hand that the commercials have, since they are the majority of the open interest. This is another chart of increasing open interest, and this confirms how things can change in a market when they've been one way for a long while. Since December of 2002, we see that coffee was being forced down all the way to December of 2003. So a year of negative, just pushing down, negative momentum. But we start slowly seeing open interest moving up. Now, it starts early during the same period that it's weak, which kind of confirms the weakness. But there's a turnaround. Price starts to move up, and open interest continues its upward momentum and actually drives coffee up to a whole new level, pushing it to 78 and giving an opportunity to potentially break a huge point, a major support and resistance area that it was stuck in. And later on, it did do so. This has been a lot of information. I've been trading futures for over 12 years, and the reality is I didn't learn any of this information in a vacuum. I've read tremendous number of books. Typically in a year I'll read 15 to 20 books about trading and to get new ideas and to hear the other ideas that are being pushed out into the marketplace. And what was important to me was to let you know that there are other resources than myself that I've relied on in the past. Hopefully I've done a great job of distilling some of the information that I've learned and presenting it in this three-part seminar. One thing that's always been important to me is that no man is an island entire of itself. Every man is a piece of the continent. This is a quote by John Donne, a great 17th and 18th century writer. He's done a phenomenal job. We've done a phenomenal job working with Pristine. And I've learned a lot from the Pristine books and the Pristine manuals. I've even attended a few of the seminars. And there's other people that I've liked over the years. One of the great books that even I keep on my shelf is one by Todd Lofton called Getting Started in Futures. Very good book for someone who's looking for something to hold on to read. Another good book that I like is by Market Wizards author Jack D. Schwager called Getting Started in Technical Analysis. It goes into in-depth on the various tools that are used in technical analysis. And he has a great section on how to use technical analysis on various types of trades. And this is a really great book. And I think it's a great reference source to kind of figure out what all those numbers mean when you're going about your day-to-day business of trading. Also, two other books that I definitely recommend by Jack Schwager, but they require a lot of knowledge and in some parts some business calculus experience, but very great books. One is Futures Technical Analysis. Another one is Futures Fundamental Analysis. They're about 340 pages, and they're actually written in a I think it's almost like a 11 by 14 size. Great books filled chock full of information, and they go very in depth on breaking down futures. Definitely not late night reading. I mean, each one of them could be a course in and of themselves in college. Then we talked about Larry Williams, a great author. Two of his books that I find very useful. One is Long-Term Secrets to Short-Term Trading. He had a lot of great concepts when he, at that time, when he was focusing solely on investing in S&P 500 as well as the T-bond trading. The book has a lot of great ideas. Some of them are dated. Some of them are very pedantic and very tight on time frames, such as getting in on Tuesday, out on Friday. and many of it may not apply to today, but very interesting, very good books. His Definitive Guide to Futures Trading is also a very strong book. It has a lot of good information on the basics. He talks to some extent about the hedgers and how the hedgers operate. And then we look at Come Into My Trading Room by Alexander Elders. I had the fortune of him reading one of my books, and he sent me a copy of his book for free, and I was surprised, and it was the companion to Come Into My Trading Room. His books tend to go more into the psychology and emotions that affect your trading. It's a phenomenally good book. It gives you the tools necessary. And it, again, as I said, no man is an island in and of himself. I've been trading futures for 12 years. I've had various types of mentors, from other brokers to old hats who've been in the markets for a long time. And I suggest that you continue to look for mentors and people who can help you continuously add to your knowledge base. And I hope that I continue to learn throughout the years. But these are just a handful of the resources that I've read. And if you'd like to know some of the other books that I've read or recommend, definitely email me and I'll recommend some more to you. Now, in getting started with traditional commodities and futures, we covered a lot of information. And I want to thank you for sitting through all this information with me. In the beginning, we started off slow. We talked about the history of futures, how futures originated, and I really wanted to impress upon you the fact that futures are a type of insurance. They're created as an insurance vehicle, and you're there to provide the liquidity. But because they're an insurance vehicle, the hedgers already know they're going to lose money in the futures market. And so you're not really trading against the guy sitting next to you if you're in a trading room, or trading against the other speculators. You're really looking to just go ahead and take the profits that the hedgers want to give away anyway, because they have fixed prices or fixed budgets that they have to meet. And so we talked about that in the history. Talked about the different scandals that have gone on in the futures investing arena, and hopefully I enlightened you to some of the ideas and why those same scandals couldn't happen again, and at least not in the same way. We talked about the various types of futures contracts. I mentioned and brought forth some of the ideas about single stock futures, as well as talked about the traditional commodities, the energy contracts, such as the natural gas, the oil. We even talked about treasury bills and the euro dollar and some of the indices and currencies. There's a large breadth of information to learn about, and if you need to know more in-depth information, you can definitely go to the exchanges that trade those items. We talked about the 10 common mistakes that new futures investors make. And the reality is old futures investors make these same 10 common mistakes. So, don't really beat yourself up if you do make one of the mistakes. Just go back to the drawing board and learn why you deviated and how best to improve your chances next time you invest. Then we talked about the 3 tools, the trading plan questionnaire, the trade worksheet, and the trading journal, to help protect you from making those 10 common mistakes. And as I said before, if you'd like to receive our free kit for those, don't hesitate to email me, noble@liverpoolgroup.com, and I'll make sure I get you those samples out. As well as in our books, Futures for Small Speculators, the companion guide, those 3 tools are in there, and as well as the single stock futures for small speculators. Those 3 tools are there, but they're tailored specifically for single stock futures. You need to have your business plan, your roadmap, and how you're going to get there, and those tools will do it for you, and they'll do a great job of helping you avoid the common mistakes. Then we went to an in-depth discussion of what futures contracts are, how they're traded, your obligations. We even went into how hedgers look at futures contracts in a pricing factor where cash and futures operate not independent of each other, but together, creating ideas such as basis. And then we went to some of the tools that I like to use to analyze futures. The accumulation distribution, open interest, the RSI, the Williams %R, a lot of different tools that I like to use to analyze the futures contracts, just to see where the hedgers are and what they're doing. We even talked about the Commitment of Traders report and where to find it to help give you an idea of what the hedgers are doing. Tons of information there, and I'm sure as you begin to trade, you'll find the tools that will work best for you. I'd like to thank you very much for listening to both seminars, Part 1 and Part 2, and having the patience to go through this 2-part seminar, Section A and Section B. And I look forward to seeing you have a successful trading experience. Thank you.